Welcome back, guys. In this week's housing update video, I've got some information and numbers that are going to shock you about the entry-level home. I've also got the latest numbers and news for the current housing market for the last week. We've got big changes in listing prices, mortgage rates have taken another turn, and lumber prices are continuing to settle down. But when will you actually get your hands on cheap lumber again? That's a great question, but one thing is for sure. You can absolutely get your hands on the like button down below and it won't cost you a thing. So with that, let's get right into the market updates for this last week. This week, median listing prices grew by 10.7% over the last year. This number is down from June when it was at 12.7%. And this marks the 47th week in a row that the listing prices grew by double digits. However, with the current downward pace, we could see single-digit growth by as soon as next week. And this could potentially allow off-season buyers to get an opportunity to buy a home as early as this fall. This is because these numbers represent less competition, less aggressive housing prices, and just more opportunity overall, albeit not that much more though. And one of the contributing factors in the slowing housing price growth is an influx of sellers compared to last year. 12 out of the last 15 weeks, we've seen more new listings compared to last year at the same time. And while the increase of sellers is great for buyers, there's still a shortage of homes. We've also seen days on the market starting to level off. In June, we hit a record pace of 37 days on the market. This means the median house on the market was only on the market for 37 days before it went under contract. The previous low was in October of 2020 at 53 days. And as you can see on this graph, last month this number just plummeted. Starting out in January of this year, we saw this number at 76 days. However, this is completely normal for January. As you can see here, January is typically the slowest month of the year. But as you see, this time is decreasing every year, and homes in general are staying on the market even less than usual each year. In January of 2020, this number was 85 days, and January 2019, it was 87 days, and it's only been decreasing since. And as in every video that I've made, housing shortage has been a huge contributing factor to the increase in prices of homes. One of the big factors that has been around for many years, but especially true in 2020, was the decrease in the amount of new homes being built. And coming up in this video is the update on lumber prices. But first, let's talk about mortgage rates, because this can have a big impact on housing prices as well. In the last week, we have seen 30-year fixed rate mortgage rates drop from 2.98% to 2.9%. Since the beginning of 2021, we have seen mortgage rates increase. When we started 2021, mortgage rates started out at 2.65%, so they've been steadily increasing, but we've seen a lot of fluctuation. As you can see here, there's been ups and downs. Right now, we're riding a down moment, but I think next week we may possibly see a slight uptick in rates, but certainly nothing major. I will say this though, in January of 2021, the rate of 2.65% was the lowest rate on record. When you contrast this to 1981, when the mortgage rate was 18.39%, that is a huge contrast. And since then, in 1981, rates have continued to go down year over year. And if you think about it, that rate would have been like putting a house on a credit card and paying it over 30 years. The amount of interest you would be paying, you'd be getting killed. And as most of you probably know, mortgage rates also do have an impact on the housing cost. This is because as rates go down, the amount of house that someone can afford goes up. So they're willing to pay more money for a house than they would have been before. But as we've seen in the last year, typically houses are going to fluctuate with interest rates. So we'll want to keep an eye on the real estate prices over the next couple of years as the Fed starts increasing rates more aggressively. And next up, lumber prices. In the middle of the week, we saw future lumber prices hit $820 per 1,000 foot. And luckily, they closed out the week at only $755, which is a great trend overall. This is still, of course, much higher than pre-pandemic costs when they were in the mid-300s. But this was before the pandemic shutdowns halted production at lumber mills and caused a major shortage in the supply chain. This, coupled with higher demand for lumber when people were home doing more home renovations, just created the perfect storm for lumber prices to skyrocket to $1,600 this May. And while future lumber prices are falling pretty quickly, retail prices will lag behind by several months. This means if you're going to buy lumber from a lumber yard, you're not necessarily going to see this dramatic shift in price yet. This is because much of the inventory at retailers was bought at a lot higher level. So until retailers are able to offload the high cost lumber and get their hands on the new lower cost lumber, you're not going to see significantly cheaper lumber for maybe 6, 9, or even 12 months, some retailers have said. This is when cheaper lumber is going to be more widely available. And this has caused some builders to hold off on building new homes. If you think about it, it makes sense. If you know the price of one of the biggest materials you need is going to be going down over the next 6 to 8 months, then why would you start building a house that's also going to take 6, 9, or even 12 months to complete? By the time they finish the home, lumber prices could be half the price or lower. That will just mean that they will have to eat the cost for much of the increased material cost. So hopefully this doesn't affect the long-term stability of the housing market, and hopefully builders continue to start building more and more homes over the next several years, because the market really needs it. Now, as I mentioned at the beginning of the video, the entry-level home shortage is real. An entry-level home defined by Freddie Mac is a home that's less than 1,400 square feet. And the numbers that I'm about to go through completely shocked me when I first read them. And I think this will be insightful for most of you, even if you're not looking to buy an entry-level home. And if any of you have been trying to buy an entry-level home, then you probably noticed that there's been so few on the market. And that's not just because of the current market state. This has been a long-going issue, and I'm going to explain all of that coming up now. First off, the supply of entry-level homes is at its lowest point in over 50 years. In the late 1970s, there were about 418,000 new entry-level homes being built every year. Fast forward to 2020, and we've only seen 65,000 homes being built. This is a massive decline for entry-level homes and explains why it's been so hard to find. And for additional context, in 1982, we saw the highest rate overall of entry-level homes being built compared to the other types of homes being built. Entry-level homes accounted for 40% of all new homes built. And since then, it's been like a ski slope, just going down, 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 faster and faster. In 2020, we're down to 7% of new homes being entry-level homes built. And a lot of this has to do with the cost of land, the cost to get permits, and other regulations that have made it harder for builders to build entry-level homes at a cheap price. So usually it makes more sense for builders to build larger and more expensive homes to cover those costs. And while starter homes have seen the biggest hit in inventory in new construction, new homes in general have seen a big hit since 2006. This is when we saw almost 2.3 million home starts per month. From then, in 2009, we saw the lowest point ever hit for new builds at only 478,000 new builds. This was in April 2009, just 3 years later. And since then, we have been underbuilding new homes. This means that we have been building less new homes than the population has grown by. In fact, coming into 2020, we already had a 2.5 million housing shortage. And the pandemic shut down construction in the busiest time of the season, in May. But another big factor has been a shortage of workers since the Great Recession. During the Great Recession, we saw about 1.5 million construction workers lose their jobs. Only about 900,000 of those have been added back in the last 12 years, which is what builders cite being one of the biggest hurdles in increasing the pace of new construction homes. So the question is, will we ever be able to make up that gap? Will we ever get back to where supply meets demand and can even out? To get some insight on this, let's take a look at history, as history is usually the best predictor of future activity. As you see here, this isn't the first time we've seen a huge reduction in new homes. The last time was the years prior to the Great Recession. In February of 1984, we saw new home build starts at 2.2 million. By January of 1991, we hit the second lowest point on record at just under 800,000 new builds. But then you see this growth over the next 15 years leading up to the Great Recession, we saw a massive increase in construction. And if you look at since the Great Recession, that graph looks very similar. We seem to be following a very similar rate as before. So despite the pandemic, if we're able to continue this current rate, we could see a peak at around 2024 or sometime after that. But we're going to have to see what the long-term effects on the construction market is going to be from the pandemic. So check back next Monday for my next housing market update. Thanks for watching, subscribe, like, and comment.